you all. You can hear me? Yeah, great. Well, thank you all for being here today. This is such an honor to come here. I went last year and it was just so great. I'm at Ultra Capital and we invest in sustainability across energy, water, waste, and agriculture. And what we want to talk about today is a paper we wrote on financial innovation in this space, in sustainability. And in that, we're going to start with this. Some of you have seen these curves before. The world is moving to more distributed from a monolithic approach. So you'll see that as the blue line goes down, the centralized on the other side is reaching price parity, which we've seen in the solar space, is one space you've seen it in. And it's due to technological innovation. Sorry, I'm a little nervous. So here, what I'm going to go through just briefly, there's other speakers here who will go more in depth with the different sectors, but in energy, we look at energy storage, and you've seen the cost come down, the capacity of the batteries go up, like as in Tesla and others, and it's becoming much more economic to do this, and it's where we need to go in the future. You'll see it combined with solar and other places. Here in the water sector, Jim is going to speak about this a lot later more, but it's our biggest resource, and we really depleted it quite a lot. Now you're seeing we're working with universities and doing water reuse in the university, and their costs are coming down dramatically, and we're reusing the water. You'll see more and more of this. We need more developers in the space, however, it's still fragmented. In agriculture, this is interesting. I'm actually an energy person, and I've been doing a lot of ag. Traditional, farms are not going to help us in the future with the increase in the population. And so we're looking more towards, greenhouses, but a newer area is vertical farming, and it's becoming a lot more localized. People really today, everyone wants organic, but actually people are now wanting more localized versus organic. And the indoor farming is able to, with the decrease in the LED pricing, is actually almost more economic than the greenhouses themselves. And so you'll have them in all of our cities. There is an energy cost to that, but that's, as I said, came down quite a bit. Waste, now we all know this, and I think Europe's a good leader in this space, but we have to start recycling 100%. And we see all the great bins here at Google. If you go up to San Francisco, they'll be a different color, and if you go down over to Redwood City, it might be a different color. We have to be consistent how we do that, but what we're looking at investing in is anaerobic digesters, and which will actually take all the waste, both organic and inorganic, and use it in gas and electricity. So really, what's the opportunity? The financial opportunity is huge here. I mean, you will see it nearly doubled in line from 2012 to 2014. 1 out of every 6 professionals are investing in whether it's called impact or sustainability. And I was just at a great conference in New York, the High Water Women's Conference, and this chart was actually shown there as well. This is the kind of risk and return, and traditionally we've invested in equities and bonds and private equity. You'll see the orange circle is really what we call real assets, so the sectors we're talking about. And you'll see that we've shifted the risk down and the returns are up. This is probably, I started at the company at the very beginning with the 2 co-founders, and this is probably my favorite slide. Really, it's about the developers and the investors and bridging the gap. There's so many developers out there that are spending 70% of their time trying to raise capital, and that's not what they know how to do, or they might need help on structuring or whatever it may be, and they're not able to do that. So they can only do 1 a year, or maybe 1 every 2-year projects. What we want to do is kind of bridge that gap with the investors, and the investors actually, we'll say, are high net worth, family offices, pensions, endowments. I'll focus on the family office because it really fits here well. They would love to make the world a better place for their grandchildren and their children. So they can't actually reach in and actually invest efficiently. They have in the past some, but they maybe not get the return they want. So it really bridges that gap, and we hear a lot of really good things about that from investors. So a huge opportunity here to do that. And we're looking at these smaller, I would say small to mid-sized market. The other banks will do the larger, and that's kind of more monolithic, but we're not necessarily looking at the solar per se, but solar storage and so forth. So, really, we look at it, we all think the world's coming to an end. We want to save the world, which I always joke with my boss. He's saying, it's a little cliche, but it is true. But it doesn't have to mean you can't get returns. You can. High impact equals high returns in this industry. We talked a little bit about these, but these are just some of the examples of projects that we look at. The indoor agriculture we spoke about, water reuse in universities and other systems as well. Waste to energy, that's the anaerobic digesters. And then distributed storage, which we're seeing a lot in California. And the paper that this all came from, if anybody wants a copy of that, then you are more than happy to send me an email, and I'll send that to you. So thank you very much, and have a great day. This is going to be great. Thanks.